The NASDAQ 100 soars more than 10%, the biggest gain since October of 2008. Welcome to the 2025 Trump short squeeze, and it could be the biggest event you've ever seen in your lifetime, by far. Because let me tell you now, even though you're up a lot today following this news that came out, there's a lot of people that are still way short this market. And I think you almost have to see a short squeeze at this point. The S&P is moving like a penny stock right now. We have big news to share. Nonetheless, S&P is up now 4.5%. And you'll never guess what the news is. Donald J. Trump on Truth Social says, based on the lack of respect that China has shown to the world's markets, I am hereby raising the tariff charged to China by the United States of America to 125% effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping off the US and other countries is no longer sustainable or acceptable. Conversely, and based on the fact that more than 75 countries have called representatives of the United States, including the Departments of Commerce, Treasury, and USTR, to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during the period of 10%, also effective immediately. Thank you for your attention to this matter. So the 90-day pause on tariffs is effective immediately. And this 90-day pause applies to reciprocal and to 10% tariffs. So 90-day pause on everything. Now, Tesla stock at the time of recording this video is up 14% today. And let me just tell you now, the short squeeze is probably going to continue. I mean, think about it like this. We had kind of come to the conclusion that Trump was a little bit off his rocker. He don't care about the economy. That, it is what it is in the near term. That was never the plan, right? We realize that now. So everyone was going out. They were short this market. You can see that in the VIX. You can see that in positioning, some of the margin calls that we have seen, recently. Like, people have been blowing up. Right? Firms have been blowing up during this volatility. And, it was never the idea to push the economy into a recession, to nuke, your essentially trading partners, right? Now, we still have the problem with China, but this is creating even more pressure on China because now they're the only ones that are feeling the pressure to actually come to the negotiations table. If that happens, my friends, you're looking at even a more intense short squeeze, right? You're looking at something that's truly incredible at that point. But I think even with this development today, if you are short in markets, you have to take down that short exposure. You have to. You have no choice. And I think just about every hedge fund manager that is long and short, that does both sides, was skewed towards the short side. And you're still down significantly from where we were just a couple of weeks ago. And from that perspective, I think it's hard to avoid a short squeeze here. This could be one of the biggest short squeezes you'll ever see. I mean, you already went up like 7% from the lows today, so it's already one of the biggest intraday swings you've ever seen before, but I do think this likely continues. Donald Trump posted on Truth Social that this is a great time to buy DJT, the Trump media company. Now, here on the day today, China responds to Trump's 104% tariff with an additional 84% tariff on all U.S. imported goods. Now, the EU today has just approved tariffs on $23 billion of American goods, including soybeans, motorcycles, and orange juice. It says here, quote, the EU considers U.S. tariffs unjustified and damaging, causing economic harm to both sides as well as the global economy. The EU has stated its clear preference to find negotiated outcomes with the U.S., which would be balanced and mutually beneficial. the EU executive said in a statement. This is, again, targeting about $23 billion worth of American goods. At this point, that's just not going to move the needle too much. The damage is far worse than that already. And well, if you were hoping for the government to kind of help out your portfolios soon, U.S. Treasury Secretary Bessent says you should have another thing coming. Wall Street, quote, has grown wealthier for 4 decades. For the next 4 years, it's Main Street's turn. Basically saying, we don't give a crap what happens to the stock market, which is ironic, again, considering that most people's retirements are tied to the stock market. So I don't know how that makes any sense. Now, it looks like some good news today for NVIDIA. Trump admin backs off of chip H200 crackdown, according to CNBC. And honestly, at this point, I think it's almost impossible to not have a short squeeze from here. Yeah, you're up 8% now on the S&P, but people were so short this market, so exposed to the downside, just to get back to not being super exposed to the downside, which you don't want to do at this point, right? You don't want to be super exposed to the downside when essentially the trade war just ended, okay? For the most part, at least for 90 days, it's pretty much over. And if China comes to the negotiations table, I mean, there's not a whole lot of reasoning at this point to be short in the very near term in this market. And it's not even about if you like the upside at this point. It's more about not going bankrupt, not blowing up your firm, right? You have to mitigate risk. That is your job in markets. And now things just flip-flopped. You have to mitigate that upside risk, right? You've been essentially betting against the upside. Now you have to go out there and buy something, or at the very least cover on your short positions because they're no longer working for you. Now, a lot of stocks are still down a lot, and there's going to be a lot of details and headlines coming out. And we'll see. I mean, I said this yesterday, though. Like, Trump has swung so far to the extreme side of tariffs that now he's kind of in a position to give you like a 30% tariff or 20% tariff on a lot of countries and still have that seen as really good news, right? He just swung so far to the extreme side that what we thought would have been extreme is no longer extreme, okay? So, you know, I don't see the appeal to play the downside now at this point. Again, China's already clapped. Worst case scenario, China stays clapped. Best case scenario, China says that they'll negotiate. And if China says they'll negotiate, then that's, again, another leg up for this market, you'd think. And you can also see this market is just sitting at pretty extreme levels as is. Now, the CNN Fear and Greed Index earlier today and yesterday was at 3, 4, 5. That's been pretty typical over the last couple of days. You can see now following this move, you're at 18, but that's still bad, right? That's still like not good by any means. All of your indexes are in extreme fear besides safe haven demand that is in fear and junk bond demand that is in greed. So you're still, I mean, very bearish overall in this market. The AI Investor Sentiment Survey, a new one comes out tomorrow, which could be a little misleading though, because following this rally, it's probably not going to pick up the sentiment shift from this move today. Bearish investors sitting at 61.9%, neutral investors at 16.3%, and bullish investors at 21.8%. There's a lot of room for people to get more bullish here. And the percent of stocks trading above their 50-day moving average was sitting in the 8% range. Following this move higher today, you're at 11% or so, if I'm seeing this correctly, 11-ish percent. Like, that's still pretty damn bad, right? Like a bad market or a market where you're not going just straight up is like 20-30%. So you could see this double or triple from here and it would still be low, right? So for that reason as well, you got to kind of look at things and say, maybe we're just way oversold still, again, following this move today, given the news that we just got. Now, it does look like a sharp move from the lows, of course, but from this level, you are still down from all-time highs of about 12.5%. So that's still a pretty sizable drawdown that you are still in. And I think one of the biggest things as well that this is going to do is it's not going to be as hard of a hit on profit margins. So that's a good thing for markets. And it's going to lower the odds of a recession, you would think, right? Goldman Sachs just came out with a note today that there was a 65% chance of a recession before this headline came out. Everyone was assuming these tariffs were going to stay in place. That's what it sounded like. This was a complete 360, 180 just, shut down everything we thought we knew. Okay. So for that reason, there's a lot of people that need to reconsider everything they thought about this market this year. Myself included, yourself included. I mean, how much is the economy going to weaken now if tariffs are not a huge barrier against growth? Like, are we back to where we were when the markets were, at 610, right? Can we maybe look forward to some of the deregulation and tax bill coming out later this year? I mean, there's different things to consider now. And while I don't think this is the moment to be all in on margin, I do think it is a very respectable trading low that we hit. And I think it's going to be pretty difficult to find markets that move substantially lower from here. The trend is decisively higher now at this point. And again, nobody was expecting it. They were all positioned for the downside. And when everyone's positioned for the downside or positioned for something to happen and something else happens, that's where you get extreme downside or extreme upside. That's why we fell 5% and then 6% and then, had that big reversal, but was down another 5% on Monday, right? People were not expecting that much downside. It happened. Everyone had to rush to go short things. Now, the opposite. Everyone was short, and now you get this upside, and you got to rush to get exposed to the upside or at least get out of short positions, which means you have to go out and buy the stocks back that you were shorting. Now, if you mix in their option activity that has been a big driver of this market, that likely will continue to be a big driver of this market, and factor in what kind of buying pressure that could add, and yeah, you're looking at, something that could last at least a couple of days in my view. And from a technical perspective, 300-day moving average, almost a guarantee that we hit that tomorrow in my view. Obviously, it's not a guarantee. Anything can happen. That is sitting at about 550. So, that would be roughly from here upside tomorrow, I would think, of about 3%. But I think you could get back to this 200-day moving average, which is at about 570, maybe as soon as tomorrow. That is upside from here of 6.73%. Above there, what happens? Really hard to say. But I think you could get back to your 200-day moving average within the next day or two. Roughly 7-ish% upside from these levels. And there's even some headlines coming out, like from Germany's incoming chancellor, that says we should have 0% tariffs on all transatlantic trade. Then the problem is solved. Trade advisor Navarro says this has unfolded exactly the way it should. And the stock market has added $3.5 trillion of market cap value today. And U.S. credit risk gauges fall by the most since April of 2020. So essentially that recession odd getting pushed down. So yeah, I mean, at this point, there's really no avoiding a short squeeze. And again, you're looking at upside of 6-7% over the next day or two, I think that's the kind of squeeze that you could be looking at. And even then, if we get to our 200-day moving average, that still puts you down about 7%, right? 6.5% or so. This is a material catalyst shift. Like, I mean, nobody... Yes, see, I talked about this yesterday when the rumor came out that we were going to have a 90-day pause except on China. I said that this was probably real news, but just premature. That they were kind of trying to test the waters, if you will, to see how markets would respond to that. How maybe trading partners would respond to that, but they didn't actually want to announce that yesterday. It was essentially leaked by somebody yesterday. And, well, today that news comes to fruition. I mean, it's a huge catalyst. And there's virtually no way of avoiding a short squeeze at this point. Now, what this also does is it lowers some of the pressure on the Fed from an inflation standpoint and, again, from an economic growth slowing point of view. Now, CPI comes out tomorrow. You're expecting a number of positive 0.3% month over month for core. Last month was 0.2%. Year over year core is expected at 3% versus 3.1% last month. Headline month over month expected at 0.2%, same as last month. And year over year headline expected at 2.6%, down from 2.8% in the prior month. So I don't know how big of a catalyst CPI is going to be at this point. The trend is higher. Could CPI help boost markets? Sure. But a hotter than expected CPI report at this point, I don't think is going to do much to stop the market rally, if you just want my honest view on it. You also get initial jobless claims expecting 224,000. And again, over the next day or two, I don't think any of this data is really going to be too important. Again, we kind of have to reevaluate what some trade deals could look like. The recession odds falling. There's just too much of a positive tailwind here that I don't think markets are going to care about the data. But Friday, you have PPI month over month expecting pretty stable numbers from last month. And Michigan consumer sentiment surveys should start to see some of those inflation expectations move lower, if not in this report on Friday. Then Wall Street's going to think, or at least assume, that inflation expectations in some of your surveys are going to start coming in better over the next couple of months. And ultimately, some of your current conditions, consumer expectations surveys as well. Things should improve upon this tariff announcement. At the time of recording this video, the S&P is up 8.5% today. Thank you, Trump, for the biggest short squeeze you've ever seen in your entire life. For better or for worse, hopefully you profited from this situation. Nonetheless, enjoy the rest of your day, and I will see you in the next one.